Welcome to our channel. Today, we're diving into the fascinating world of unusual tax-saving strategies from around the globe. You might think you know all the tricks in the book, but we're here to unveil some creative methods that could help you keep more of your hard-earned money. From quirky deductions to unique loopholes, this video will explore innovative approaches that people in different countries are using to minimize their tax burdens. Why is this important? Understanding these lesser-known strategies can empower you to make smarter financial decisions and potentially save thousands. So, whether you're a seasoned tax filer or just starting out, you'll want to stick around. Get ready to spark your curiosity and discover how thinking outside the box can lead to significant savings. Let's jump in and explore these intriguing tax-saving methods together. Tax deductions for unusual expenses. When it comes to tax deductions, many people overlook some truly unique expenses that can lighten their tax load. For instance, did you know that pet care costs can be deductible if your furry friend is a certified therapy animal? That's right. Expenses related to their care, training, and even travel can qualify. Another surprising deduction comes from hobby-related costs. If you're passionate about photography and sell a few prints, you can deduct expenses for equipment, classes, and even your home office space. Imagine this: a photographer who spends thousands on gear and classes, only to find out they can deduct those costs, significantly reducing their taxable income. It's like getting a bonus for doing what you love. These entertaining anecdotes highlight how thinking creatively about your expenses can lead to substantial savings. So, keep your eyes peeled for those unusual expenses that might just qualify for a deduction. Charitable contributions beyond cash. When it comes to charitable giving, many people think only of cash donations, but there are plenty of unconventional items that can also yield significant tax benefits. For example, donating art pieces or collectibles can provide a hefty deduction based on their fair market value. Similarly, vehicles, whether they're cars, boats, or even motorcycles, can be donated to charities, allowing you to claim a deduction that reflects their worth. The valuation process for these items can be a bit tricky, often requiring appraisals to determine their fair market value. This valuation directly impacts your tax savings, so it's essential to do it right. Take the story of a couple who donated a vintage car they no longer used. Not only did they clear space in their garage, but they also received a substantial tax deduction that helped them fund their next adventure. Donating unusual items can be a win-win for both you and the charities you support. Tax credits for energy efficiency. If you're looking to save money while making your home more eco-friendly, tax credits for energy-efficient technologies are a fantastic option. Upgrades like solar panels, energy-efficient windows, and high-efficiency heating and cooling systems often qualify for substantial tax credits. These credits can significantly reduce your tax bill, making it easier to invest in sustainable improvements. The financial benefits are impressive. Not only do you receive immediate savings through tax credits, but you also enjoy long-term savings on your energy bills. For instance, one homeowner installed solar panels and saw their electricity costs drop by over 50%, all while benefiting from a generous tax credit. Another family upgraded their insulation and windows, resulting in a cozy home and a nice tax break. These success stories illustrate how adopting energy-efficient technologies can lead to both environmental benefits and financial rewards. So, why not consider these upgrades for your home? Travel expenses for business purposes. When it comes to business travel, many expenses can be deducted, making your trips not only productive, but also financially savvy. For example, airfare, hotel accommodations, meals, and even transportation costs like taxis or rental cars can all be claimed on your taxes if they are directly related to your business activities. However, keeping detailed records is crucial for maximizing these deductions. This means saving receipts, noting the purpose of each trip, and maintaining a travel log. One entrepreneur shared a hilarious story about a conference in Las Vegas where he accidentally booked a luxury suite. While it was a splurge, he was able to deduct the cost because it was part of a business meeting with clients. By documenting everything, he turned a fun trip into a smart financial move. So, the next time you travel for business, remember to keep those records handy and enjoy the potential savings. Utilizing tax shelters. Tax shelters are financial strategies designed to reduce or eliminate taxable income, allowing individuals and businesses to save money on their tax bills. Essentially, they provide a legal way to shield your income from taxation, helping you keep more of what you earn. There are several types of tax shelters available, including retirement accounts like 401ks and IRAs, which allow you to defer taxes on your contributions until retirement. Other options include real estate investments, where depreciation can offset rental income, and certain types of insurance products that offer tax advantages. For instance, one small business owner invested in a qualified retirement plan, significantly lowering their taxable income while securing their future. Another individual utilized a health savings account, HSA, to cover medical expenses, enjoying tax-free withdrawals. These real-life examples illustrate how effective tax shelters can be in protecting your income and enhancing your financial strategy. Investing in opportunity zones. Opportunity zones are designated areas in the United States aimed at spurring economic development in underprivileged communities. Created by the Tax Cuts and Jobs Act of 2017, these zones provide investors with significant tax incentives to encourage long-term investments in struggling neighborhoods. One of the primary benefits of investing in opportunity zones is the potential for tax deferral on capital gains. If you invest your capital gains into a qualified opportunity fund, you can defer taxes on those gains until 2026. Additionally, if you hold your investment for at least 10 years, you can potentially eliminate taxes on any gains from the opportunity fund investment itself. For example, one investor purchased a rundown property in an opportunity zone, renovated it, and turned it into affordable housing. Not only did they contribute to the community, but they also enjoyed substantial tax savings. These success stories highlight how investing in opportunity zones can be both financially rewarding and socially impactful. Tax benefits of health savings accounts. Health savings accounts, HSAs, are a powerful tool for managing medical expenses while enjoying significant tax advantages. Contributions to HSAs are tax-deductible, meaning you can lower your taxable income by the amount you contribute. Additionally, any interest or investment gains within the account grow tax-free, and withdrawals for qualified medical expenses are also tax-free. To be eligible for an HSA, you must be enrolled in a high-deductible health plan, HDHP, and meet certain criteria. For 2023, the contribution limits are $3,850 for individuals and $7,750 for families, with an additional $1,000 catch-up contribution for those aged 55 and older. Consider the story of a couple who diligently contributed to their HSA over the years. When unexpected medical expenses arose, they were able to cover the costs entirely with tax-free withdrawals, saving them hundreds of dollars in taxes. HSAs not only provide immediate tax benefits, but also pave the way for long-term savings and financial security. Creative business structures. Choosing the right business structure can significantly impact your tax liabilities and overall financial health. Common structures include limited liability companies, LLCs, and S corporations, S Corp, each offering unique tax advantages. For instance, LLCs provide flexibility in taxation, allowing owners to choose between being taxed as a sole proprietorship, partnership, or corporation. This flexibility can lead to lower self-employment taxes. On the other hand, S Corp allow business owners to pay themselves a reasonable salary while taking additional profits as distributions, which are not subject to self-employment tax. This can result in substantial savings. Take the example of an entrepreneur who started a consulting business as an LLC. By electing to be taxed as an S Corp, they were able to save thousands in taxes each year, allowing them to reinvest in their business. These stories illustrate how selecting a creative business structure can optimize tax savings and enhance financial success. In this video, we explored a variety of unusual tax-saving strategies that can help you keep more of your hard-earned money. From unique deductions for pet care and hobby-related expenses, to the benefits of investing in opportunity zones and utilizing health savings accounts, these creative approaches can lead to significant financial advantages. We also discuss the importance of choosing the right business structure to optimize your tax liabilities. Understanding and exploring these lesser-known strategies is crucial for maximizing your financial benefits and ensuring you're not leaving money on the table. If you found this information helpful, we encourage you to subscribe to our channel, like this video, and share it with friends and family who could also benefit from these tax insights. Stay tuned for more tips and strategies to help you navigate the complex world of taxes and improve your financial well-being.